Yo, what up, though? It's your boy Train the Trader. Got another one for you guys today. So let's say you are new to the market. You're looking for a way to help you understand the trend of the equity, the stock that you're trading, currency, crypto, whatever it is. If it's got candles on it, if it's a chart, if it tracks price, I got a tip for you guys today. It's really important, something you can use to help you understand the trend of the market. Let's go. Let's get into the video. What up, though? What up, though? All right, let's get into it. So here's what I got for you guys today. I want to introduce everybody. If you haven't heard of this before, welcome to the market, because you're probably new. If you've never heard of the 200 SMA or EMA, the 200 SMA or EMA. This is what you can call a study. It can be used for technical analysis and fundamental. Today, we're mainly going to be talking about the technical side. So I'm going to pull up some charts and show you guys, plot a 200 EMA, because I use the EMA and I'll explain the difference. This is what I use. This is what a lot of major industry traders, a lot of investors use this study to chart price action over a period of 200. It could be 200 days. It could be 200 candles on the 5-minute chart, the hourly. You can use it on all time frames, and it tracks the last 200 candles. That's how it's going to work. And this is major because this 200 EMA or SMA is what a lot of industry traders and investors use to gauge whether a stock, the price is bullish or bearish. Okay, and if you don't know what bullish and bearish is, go check out some of my other intro videos. And while I'm at it, guys, help me out. Help me grow this channel. Hit the thumbs up, subscribe, lock in, learn something, ask some questions. But for sure, at least give me a thumbs up if you like the content that you hear. And help me support this channel. Help me grow this channel, get this information out to people that need to hear it. There's a ton of people that need to be exposed to the market. All right, so let's get back to it. So the 200 EMA SMA. That's what we're going to look at today. I'm going to pull up some charts, and I'm going to show you guys how prices interact with the 200 EMA. All right. And first, before I do that, y'all know what time it is. It's your inspirational words from Train the Trader. Let me give you guys something real quick, real early in the video, so we can get the mood right for learning. We want an environment conducive to learning. You know what I'm saying? So we need to make sure our minds are right. All right, here we go. So this is by Confucius. He who conquers himself is the mightiest warrior. He who conquers himself is the mightiest warrior. Reading the words, it's very obvious what it's saying. Conquer your demons. Simple as that. What is this that you feel is holding you back? What is it? What habit do you have that you know you should get rid of? What demons are you dealing with that are making you act a certain type of way, or maybe blocking some blessings? See, a lot of people spend a lot of time with the external look, right? The appearance on the outside. You go to the gym, get your body right. You go to the beauty salon or the barbershop, you get your hair right. You can get all the face products, get your skin right. But what kind of work are we doing on the inside? Are you really conquering yourself? Are you dealing with the things that are holding you back? And so that's important, especially on this journey. If you're new to the stock market, you're new to investing, congratulations. It's probably one of the best decisions you're ever going to make in your life. Keep going. But this market, I'm telling you guys, this market will challenge who you are as a person. And you cannot have success in the market if you don't have your own mental state together. It's too emotional, especially for beginners. So as we learn this, as you learn and you take you're going on your investment journey, make sure that you're doing the work to work on yourself. He who conquers himself is the mightiest warrior. Work on yourself. It's going to exponentially help your growth by making sure you are right. If the brain is not functioning right, the body can't operate right. So, just a little words of encouragement, words of inspiration from Train the Trader. All right. Now we can take a breather. We can get our minds back right. Let's lock in for this short little tip. The 200 EMA. So, EMA and SMA. An EMA is an exponential moving average. Okay, this one is set on 20. I'm actually going to deactivate this symbol right here because I'm going to save that for the next video. So the only line that you're going to see on my chart is this blue line right here. This is my 200 EMA, my exponential moving average. Now I mentioned the simple moving average, and I'm going to plot that just so you guys can see a difference here. Okay, do this off top real quick. Add this because I don't use this. Like I said, I use the EMA, but I want you guys to see this difference here. So I'm going to change this to 200. Struggle bus is real, especially when you're on vacation and your mind ain't been just actively working like that. Straight up. All right, so I'll make this simple. It's going to apply it. And now this teal green line, whatever you want to call it, is the SMA. And I did this for a reason, because they're basically the same. You get a little separation here. The exponential moving averages, whether it's the burps, whether it's the 5 SMA, the 9, the 12, the 15, 21, 50, whatever it is, an SMA versus a EMA and a SMA, as you saw, is a simple moving average. The EMA is the exponential moving average. In my experience, the EMA just seems to be a little bit more reactive, and it just takes in a little bit more data, a little bit more than the SMA, and that's where you see these differences. The concept and how we use them is exactly the same. Okay, so you can honestly pick either one and work with either one. I just happen to use the EMA. I just like EMAs better. No other real reason than that. And as you can see over this chart, it's pretty much tracking the same way as the EMA. And it's not just this name. I'll go to a couple other ones real quick just to show you guys random names. This one's damn near in line with it. So you see what I mean? Close. Almost the same thing. And this is a daily chart over a 5-year period. So these are long periods of time. So you can see it tracks right with it over time. One more name. Let's do Tesla. And there you see it. Slotted blue line, dark blue line is my EMA. This line here is my SMA. So 3 different names y'all see is pretty much the same thing. So take your pick. Do some research. Use it for a few days. Use them both. See which one you like more. Just experiment with it. This is what you get with time in the seat. As you trade more, as you look at more charts, you'll figure out which one you're more comfortable with. So I'm going to take that off so it doesn't get confusing. This one here, like that, back to just my 200 EMA. Okay. So I want to go back to Uber because I want to show you guys this. Over a 5-year period, if we track all the way back, we're going to start at January of 2020, right in this area. And what I want to point out, and if you recall at the beginning of this video, I said this is something that a lot of the pros use. A lot of big time investors, traders use the 200 EMA because it gauges bullish or bearish price history. Okay. That's important. Why? Because if you're trying to get on the right side of the trend, the first thing you need to understand is the price above or below the 200 EMA? And I'm going to keep saying EMA because that's what I use, but just know the SMA works exactly the same. When you hear me say EMA, I'm basically saying SMA too, just so that's out the way. All right, back to it. 200 EMA. If the price is above the 200, it's bullish. Bullish. This is a bullish picture. This here is a bearish picture. Now, the stock market instinctively, naturally, organically wants to go up. All stock prices want to go up. Just know 70+% of the time the market is going up. And that should be that way because the market is designed to go up. So, with that simple basic knowledge and the 200 EMA plotted on your chart, if you have a price underneath the 200, so if this is my 200, price is here, that is well beneath the 200 EMA. These are major value zones for strong, fundamentally strong companies. I have to say that. If a company is not strong fundamentally, you can almost assume it's not going to be doing well, and it'll probably spend a lot more time underneath the 200 or right around it, just like this. Not to say that Uber is not a strong stock. Uber is a very strong company. So, when we have strong companies, Uber being one, we can go to another one. Walmart. Forget about it. If you're not investing in Amazon or Walmart, I don't know what to tell you. You're just not paying attention. But deep value zone underneath the 200 broke out. Deep value zone underneath the 200 broke out. Deep value zone underneath the 200 broke out. Y'all see what I'm getting at? Stocks can only do 3 things, ladies and gentlemen. They can only go up, they can only go down, and they can only go sideways. That's it. That is it. So the 200 EMA becomes very important because when you get a stock that is going down and it is below the 200, if it is a fundamentally strong company, it's only a matter of time before it what's. It's only a matter of time before it what? It bounces. You get in these deep value zones underneath the 200 EMA. These are buying opportunities, folks, because we see what happens every time. And if the stock can only go up, down, or sideways, if it's going down, it's eventually got to change course. It's either got to go sideways or it has to go up. It's that simple. It is that simple. 200 EMA, major gauge for finding trend. Now, I told you this is a daily. We can do this on a 5-minute. So if you're a day trader, intraday, swing trader, whatever it is, you're looking at smaller time frames. Oh, my blue line is still on the chart and it's still tracking the last 200 candles. Price activity over the last 200 candles. So we get a devalue back above, bullish picture. Below the 200, bearish picture, price goes down. We're below, peaked it, but the buyers weren't ready to step in. Sellers still in control. Below, separation from the 200. Below it, this is a deep value zone. And what I mean by deep value is if a company is strong and most of the time the price is going up, when it goes down and it bottoms, that's what you call buying something on discount, just like when you go in the store. So if something is originally, in this case, we'll call it $92 and it's currently $88. It's not much of a discount, but it's a discount, right? So by entering trades like this in calls, if it gets back to or above the 200, that's a very low risk winning trade. Very low risk. But you can now see it switched. We have an elephant candle separating, going straight through the 200. So this means that the buyers really stepped in here. And look what happens to this price. That's currently 90. And this is where we currently are. So we could be at the beginning of a very bullish run right here, coming from a deep value zone. So y'all get the concept? Fairly simple. Plot the 200 on your chart. Use the 200 to gauge whether we are bullish, price above the 200, or is the price below where it would be bearish. And you can start gauging price history and entries for long-term plays, swing plays, if you're getting into options trading, or if you're just buying equity, you can go to the daily and find those areas where it's close to the 200. I'll go out a little bit more. This is another good point. Every time this stock has gotten on the daily below the 200 or right around the 200, it's just bounced. Somewhat close, and it just bounced. Somewhat close, and it just bounced. This is what happens when you find quality companies that are doing well. They go on these bull runs, and they can be above the 200 EMA for years. Literally years. So that means maybe you don't get a deep buy, a deep discount, but if you get something close, it could be a buying opportunity. Y'all follow me? Pretty simple concept. Plot the 200. Guys, like and subscribe these videos. If you like what I'm sharing, help me get this information out to some more people. I'm so thankful for everybody that views these videos. Got to go to post 100. And I'm going to come back in this next video and I'm going to add another tool, another tip that you can do, that you can use with this 200 that's going to help your trading decisions as well. So tune in for the next video. That's all I got for you guys today. Plot the 200. And remember, he who conquers himself is the mightiest warrior. Work on yourself. Make sure your mental is right to play this game. And let's get this bread. It's your boy, Train the Trader. I'll holler at y'all next time. Peace.